Kevin Cox is a property developer in the UK. So we're just going to dive in a little bit of his story. So, hey, Kevin, how's it going? All good?
All good, Fabian. Thank you for having me on your podcast. Yeah, all good. Thank you very much.
That was great. That's great. All right, Kevin. So this is a question I ask every single guest I had in here. So for the people who doesn't know you yet, who is Kevin in 1 minute, and what do you do? What do you actually do on a day-to-day basis?
Thank you. So Kev is someone that works in the corporate world for many years, 15 odd years working in sales. Before that, working in IT, and probably about 5 or 6 years ago, I looked to get into property, bought some buy-to-lets, did some service accommodations. To be honest, didn't really understand what I was doing. I was just fortunate enough to have built up a bit of capital to be able to do that. And then it got to a point where all that capital was deployed. So it's like, what can I do now? And my business partner now, Jordan, asked me to get involved in a sourcing business, which started out as something very much doing everything, rent to rent, service accommodation, buy to let, HMOs, everything. I've done every particular property strategy you could do, but then we got asked to sell a block of flats, and we went, oh, that's interesting. And from there, we joined forces with our other business partner, Jack, and Blockland was born.
Okay, that's great.
Blockland is all about selling blocks of flats, selling, managing, leasing, getting finance, doing refurbs, the lot. So that's all we do now.
Block of lands, literally just the managed lands or all kind of properties?
No, we literally do blocks. That's it. And we get approached to do all sorts. Can you find me HMOs? Can you find me buy-to-lets? And we say no. We are specialists in our area, and that area is blocks of apartments.
Okay, that's great. That's great. So would you do you describe yourself as someone who lives, breathes, and just eats and sleeps property, basically?
Right? Yeah, absolutely.
When did that actual obsession actually start for you? Like, is there a specific moment where you flip the switch?
I think very much a turning point for me in my life was unfortunately losing my father about 9-10 years ago now, because my father was very much get a job, get a salary, have a nice car, and I did. I had an okay corporate career, but I'd always looked, and I remember actually having a conversation with my mum, who said at 19, she's told me this actually, I don't remember it. At 19, she offered me some money to buy a second house. And I think it probably planted the seed, but it never grew. And then as my dad unfortunately passed away, I started to look and go, I want more. I think I can do more. And I saw that property was a vehicle that potentially could eventually give me the freedom that I hope for. I'm still not quite there yet, but I'm still very much early in that journey. But I realized that, yeah, that property vehicle could give me the tools to be able to live a life that, you know, I could never have working in the corporate world. So since then, I am very much live, sleep, eat, drink, dream about property.
All right, that's interesting. So that's basically how you got into property. Just from something that I saw is that many people are in property because of the freedom that gives them the ability to have that freedom. So yeah, that's quite interesting. Now, now you are. Yeah, go ahead.
I was just going to say, I think, you know, particularly people, you know, my age, I'm in my 40s, and I think, you know, when you get to certainly my age, you realise time, you know, is not an infinite number. And certainly being able to buy back your time is something that is priceless. So, and people see and view property as that vehicle to be able to buy that time back, for sure.
Yeah, no, 100%. That's why we are in it, don't we?
Yes.
But yeah, I mean, right now you're an award-winning apartment, block specialist, and co-founder at Blockland. But you're also involved with the state agency, correct? And you're basically your own portfolio. What does your current ecosystem looks like in simple terms with all this stuff?
What does what? Sorry, Fabian.
What does your current ecosystem looks like managing all this stuff?
Yeah, I think like any business, really, you've got to look and evolve and try see how, particularly with the evolution of AI, of how you can bring that into your business. But ultimately, our business is very much, I'm not involved in anything else now. I made a decision, some stuff that was in my power and some stuff that was out of my power, to solely focus on Blockland, because I was doing for many years multiple things within property, thinking that being involved in multiple things would get me where I wanted to get to quicker, and actually it didn't. It just slowed me down. Since I've been solely focused on Blockland the last 9 to 12 months, that has massively grown. The awareness of it's become bigger. I've just sat down on a meeting before this with a guy that owns probably the second or third largest online auction platform. And what does he invest in? Invest in blocks of flats. So we know that the ecosystem that we work on is solely blocks of flats, and they are so massively in demand. So if we can offer a product that just focuses on that, and everything that's involved within that, lending, solicitors, bridging, management, buying, selling, leasing, everything, then we know we're in a market where no one else is doing what we do.
Yeah, so basically the whole package, right?
Absolutely. From start to finish, we want to be able to offer a client that comes to us, if they need it. Some might not, some experienced investors might not need it, but we want to be able to have someone come to us and say, I want to get involved in blocks, but I don't know where to start. Okay, well, let's look at your lending requirements. Let's look at what the solicitor needs to do. Do you want a title split? Do you want to get individual financing on each individual property? What's the exit? Do you want a provider in there? Do you want to rent privately? Do you want to split them off and sell some off and keep some? So we're able to offer that, in essence, consultancy service when it comes to blocks, of how to start, how to do the bit in the middle, and then what to do on the end.
All right. Yeah, that's interesting. Yeah, because I saw, blocks of flats. People are buying a lot into, buying all those kind of investments. So it's actually interesting what you're saying. Now coming back into your, origin story and just like the first deals, you started with vanilla buy-to-lets, and then sold them to move into flips, right? What triggered that change in the strategy? What do you learn from that transition?
Yeah, so I've literally done everything. 5 or 6 years ago, I've literally sold every possible strategy you can think of: rent to rents, flips, vanilla buy-to-lets, HMOs, and ultimately what it came down to is looking what the market is doing, looking at who's out there, look at what people are sourcing. And every man and his dog that wants to be a sourcer will chase the money. They won't look and actually what value do you add. They will just be like in main. And unfortunately, it's because of the message that's put out there by a lot of educators, is you can get into sourcing and earn an incredible amount of money to get you out of your job, which you can if you do it correctly. But we noticed, again, when the opportunity came along to sell a block of flats, well, this is very different. No one else does this. Do they understand the value that a block brings, and how to value it, and what you can do with it, and how you can do different exit strategies on a block? And we noticed this probably before the market started to notice it. So we got in there early, and now we've got a database of over 1,500 investors looking for blocks of flats. And again, the supply, the demand massively outweighs the supply. Well, that's great for us. We just need more. We need more products to be able to sell. So for us, that's how we end up getting in it. And if you look at the life cycle of many investors, they'll start with buy-to-lets, flips, BRRs. They'll go to HMOs, and then they'll go, okay, what's the next thing to do? Blocks of flats. So it works really well, and we sit at that higher end, more educated, sophisticated investors as well, which is great.
Yeah, no, that's amazing. That's amazing. What was the deal early on? You thought like, right, I actually know what I'm doing. This works. So walk us through one that you thought like the numbers, the structure, everything made sense.
Yeah, as in blocks, or just in sourcing in general?
Could be both things.
Okay. Look, I think a lot of people think they know what they're doing, but actually, until you do it, you see it through, you have somebody that's on the end of the phone that's willing to pay you a fee for sourcing a property. And then that goes all the way through a conveyancing and actually completes. Someone then maybe does a renovation on it, and then at the end gets it revalued, or they sell it. You don't ever really actually know. A lot of it is hypothetical, but it comes from being educated understanding the market and actually going out your way to know what works, what doesn't work. And I think really in the early stages, I probably was, sort of fudging my way through it, not lying, but just sort of working my way. So it's hard to say what deal was the one, but I think certainly when we got presented with a block, and I think, we're way into double digits now with block sales. I think that when we actually realised how to break down a deal with a block and actually sell it and see how that goes through, it just seemed to be a little bit easier once we understood the complexities of it. Unlike a little bit of guesswork, because that's ultimately what it is when you're doing a flip or a BR. You don't fully know what it's worth until it either sells or gets revalued.
Sure.
Blocks is a little bit different. So I'd say, I think the first block deal was probably about 18 months ago. And that was when we really knew this is where we want to sit and we know we can be experts in this area.
Yeah, okay, that's great. So you see a block of flats. How different is that from, let's say, a normal flip deal or a BRR?
Yeah, I mean, ultimately, they are in essence the same. You're working with a building. It could be an old house that's been converted into flats. It could be a purpose built, which is it's built from the ground up into flats. But what you're dealing with is multiple tenants or multiple dwellings under one roof. And so the exits are actually quite similar, but they're also added exits. So there's something called title splitting with a block of flats, which is really powerful. It's really in demand at the moment, where you take a block that has a freehold, which is the building and the land that it sits on, and then you split it down into leasehold. So each individual flat gets its own leasehold, and then you still have the freehold that sits as per the building and the land. And so for me, there's just all those different connotations and different opportunities that a block of flats offers that nothing else out there within property will offer. HMOs, buy to lets, commercial maybe, that's a completely different ball game altogether. So yeah, I think that's really what it comes down to.
Okay, that's interesting. You say the freehold, then you turn it into a leasehold, the different kind of flats, right? What's different from that? I mean, I know it's almost the same as a flip, but let's say a conversion, maybe, right? Let's say it's a commercial unit and a conversion. Like in those cases, what would you actually do?
Yeah, so I'll just explain the difference. So obviously, if you're buying a building that's a shell or it's something else, maybe a shop, maybe a retail unit, you've got to spend money on that to convert it to flats. What we're talking about when you talk about title splitting is you're taking an existing building that's already converted to flats that potentially will be rented out, might need some work, but nothing that's of a conversion. And ultimately, you're splitting that down. Because when you've got one freehold, a lender will only lend on the building because there's only one title. That's why it's called title split. There's only one title. But if you split it down, and now again, if you're doing a conversion, what you would class as a commercial to residential, you've got two opportunities. You do that commercial to residential on the freehold building, and you don't split it down, but you have the individual flats, which you then get the lending on the whole building, the freehold, or you split them down once you've done the conversion. Similarly, you've not got all that cost to do the conversion. Someone's already done it. They've just not done the title split. So in essence, it's what we class as a paperwork exercise. It's what a solicitor does. They take the freehold, they put that into one company. They then create the leaseholds for each individual property. They put that into another company, and then a lender comes along and goes, okay, there's 6 properties with 6 individual titles. We'll lend on each individual one. So unlike the freehold, which yes, potentially could be worth £100,000 a property, they can't value it that because they have to value it as one. But when you've got 6 individual properties, they can lend and value each property as one individual. So they can give you 100,000 on each. Does that make sense and hopefully explain it?
Yeah, makes sense. Now, I know you said, blocks of flats is it's mainly where the market is going. It's mainly where the money is going. But I mean, apart from all the property traders that are out there, why apartment blocks? Like you could do HMOs, you could do SA, you can do BRR. Like out of all the strategies, what made you like double down into blocks of flats?
Yeah, very, very good question. So again, if you look at buy-to-lets, Increased compliance. Renters Reform Bill just coming in May. You've got interest rate rises. You've got more taxation. You've got rents. Rents possibly, yes, they are going up, but now those will be capped by the Renters Reform Bill. So margins are being squeezed, particularly if you own those properties in your own name. You can't even claim the interest that comes in that you pay for the house, for the mortgage. You can't claim that against the rent. So in a company, you can. So the margins are very tight. So if you're lucky, if you make £200, £300 a month off a rental, HMOs, there's been a big push on HMOs over the last sort of 5 to 10 years. Convert a house into 4, 6 rooms, rent them out. But again, it's been a big push. There's been a lot of HMOs come to market. Hence why the councils are introducing Article 4, which is stopping HMOs being converted into something called permitted development, PD. So again, like service accommodation over the last 5 years, it's become very saturated. What happens is there's lots of supply and not as much demand, which means rents don't go up, rooms don't get filled, you have lots of voids. Where with blocks of flats, you in essence have 6, let's say again, we use the example, you have 6 dwellings, not 6 rooms, under one roof. So all of a sudden, yes, you've got the Renters Reform Bill that still affect that, but you've got a building that is probably, I don't know, twice the price of a house, but you've got 6 rental incomes coming off, and they're in their own individual homes, paying all the bills themselves, all the council tax themselves, and you own the freehold, which is going up in value. So that, for me, is why you see a lot of people, particularly with all the new regulations, compliance, and taxations that are coming in, are going to and moving to freehold blocks.
Yeah, no, that's actually a great way to say, but yeah, super interesting. Now, what exactly does Blockland do in one sentence? Like, what would you say in one sentence? Like, who do you help? What do you do? And maybe how much do you make of money per deal?
Okay. Yeah, so Blockland is in essence an agency that specialises in blocks of flats, whether you're looking to buy, to sell, to lease, to manage, to get finance, to find a builder, to make sure that you're fully compliant. That's ultimately what Blockland does. We work exclusively off market as well, so nothing will be seen unless you are working with us or on our mailing list or an investor of ours and client of ours. And typically we charge 2% plus VAT as a buyer's fee. So again, because we're working exclusively off market, you can't buy through us unless you pay our fee. So again, £1 million block, our fee would be £20,000 plus VAT.
Yeah, all right, that's good. Now you mentioned you've been working with funds and just high net worth investors, right? To basically find this blocks of flats. What does that process look like in from lead to completion?
Yeah, so we do a lot of lead generation through, and ultimately our business started on something very old school, which is called direct vendor lettering. A lot of people have caught on to that now and do that themselves, but we've got a certain technique we do to be able to generate an interest and curiosity with those letters to generate calls, which then lead to a conversation. So we'll generate those leads like that. We also use, and now we're starting to integrate things like AI, marketing funnels. We're starting to look to expand our way of generating leads. We also, because of the brand and also people know we're an expert in our areas, we now get organic leads come direct to us, whether that's through other agents, because we're happy to work with other agents to split fees, whatever it is, or whether that's actually from vendors or estate agents. And now it works on the other end with the high net worths. We don't work so much with funds because, again, they're very particular on who they work with, because again, it's a lot of money that they're involved in. But high net worth, they have their criteria. And in general, Fabian, they are looking to add value. How can I buy, and whether that's buy to let, HMO, a block of flats, a conversion, how can I add value? So typically they're looking for someone that's either what we class as distressed and needs to sell quick, or they need to get money out quick, might have inherited it, might have got themselves in financial difficulty, or they're looking to add value, do some element of renovation. So in essence, use the BRR strategy, buy, refurbish, refinance strategy, so they can pull that money out. And so those are the types of investors. Or they are, because the advantage of blocks of flats, because you've got multiple dwellings under one roof, you can get higher yields. So unlike a buy to let, where in an area you might get 7%, a block of flats will probably achieve 10%. So again, they're happy to put their money in because they're getting a better return on their money over the long term.
Yeah. You say marketing funnels, which is, it sounds interesting to me because many people don't do, they tend to go to the old school way, like you tell me, like, for example, direct to vendor with letters, right? That's something that is coming up right now in the recent market, right? But when you say marketing funnels, what's the strategy you use behind that? Because I'm curious, what do you use on that?
Yeah, so we do, or we're in the midst of doing it. We've done some piloting testing, but ultimately it's ads, it's Facebook ads, it's Google pay-per-click. It's basically getting the brand out there, sending the message out there. We've recorded videos so people, because ultimately property is a people business. People buy from people. So if someone wants to come and sell their property to me, property through Blockland, they're going to probably want to get on with us or know us and trust us. So we've got to get the message out there of what we do and how we do it and how we can serve them best. So we're going to be doing that through Facebook ads, pay-per-click, and all various other strategies that we can. And we're starting then as well. The back end of that is once they have clicked an ad, they go into a funnel system. That's then where we add the value. So they'll go into a funnel system and we'll add values about if they're a seller, have you made sure your block is compliant? Have all your tenants got the right documentation like EICRs, electrical certs and gas certs? Because if with the new rent reform bill, you won't be able to evict them. And then it hopefully gets to a point where we can then either advise them or help them or manage their block to make sure it is compliant, or they'll go, you know what, it's too much work for me. It sounds like too much work and too much money. I'm ready to sell. And that's ultimately what we're trying to do. So we will basically nurture them into a position where they either want to sell, they may want to buy, or they want us to help them manage.
Yeah, and that is targeting only landowners, right? That owns freehold only, right?
Yeah, it will be targeting landlords, yes. So we'll tailor the ads, we'll tailor the content, so it's talking to landlords. But we're also looking to set up, in essence, a consultancy service. So people that may well work abroad may well have a very profitable business where they can't pull all the profit out without paying huge amount of tax, and then they would look to restructure their business and create what's called a holding company, set up separate SPVs, special purpose vehicles, to move that profit from their business into a holding company and then into that SPV to purchase, or like people that work on oil rigs, so we can help them then find these high yielding properties, i.e. blocks. Because as I explained earlier, a buy to let, you'll be looking, if you get 7%, a block of flats, you're talking 8, 9, 10, 12% if in the right areas.
Yeah, all right, makes sense. Now, you told me a little bit about the strategies you use. What do you think is right now working the best for you to get to this landowners, basically, or property owners?
Right now, I think it's the old school. I think it's the old school letter approach. And again, it's just how you tailor your letter to make it attractive, create curiosity, and engage with a phone call. And we're going to be doing, because again, as I've said, there's a lot of people doing it. So we've got to set ourselves apart. How do we do that? So we're now in the testing phase again. So we've been lettering, we've sent tens and tens of thousands of letters, had hundreds and if not thousands of calls with vendors. But again, it's starting to slow down. So we need to adapt. How do we do that? So we need to do some A/B testing. Send this letter, send that letter, change it up, put this different wording in, make it different so we can start to drive that back up. Ultimately, for me, that is the best way right now. We'll then start to build other systems to generate leads organically through ads, through LinkedIn, and all that other stuff as well. But for me, if anybody wanted to start out and wanted to start generating direct to vendor leads, lettering, bar none. Very low cost. You have to do volume, but compared to ads and building funnels and creating systems, yeah, cost is very different.
Yeah, all right. That's interesting that you told me about direct to vendor on letters. So I mean, you already run sourcing businesses in the past. Like, what does proper sourcing operation on what you're working on, which is apartment blocks, will it actually look like in 2026?
I think I have had this actual conversation with a few sources, and I was at a networking event yesterday, and I was like, you got every sourcer, and again, I think I covered it earlier. What they do is they chase the terminology is chase the shiny penny. So they know they can make £3,000, which is the typical sourcing fee. So they'll chase every different strategy to do that, to make that money. And I think for me, it makes you a jack of all trades and master of none. So with so many out there that do that, why is an investor going to work with you? Why is a vendor going to work with you? Because you're not an expert in that area. Yes, you do and find off-market deals, but focus on doing HMO conversions. Focus on doing commercial to residential developments. Focus on doing buy-to-lets, vanilla buy-to-lets. Focus on doing flip. Maybe 1 or 2 strategies, maybe 3, maybe max. But be an expert in those strategies and in certain areas as well. Because obviously the country's a massive area, different for us because we've got one strategy, so we can cover the whole country. It works. But for me, sourcing business is, and because there's so many out there, they need to be experts in their areas. So people go, I want to work with them because that's what I want to do.
Yes, exactly. Now you said you focus on a couple strategies. Would you also say to them they need to focus on only one area or just look in the whole UK?
Again, if you're going to be an expert like us in one area, which is blocks, you can cover the UK because you can spend that time to understand different areas, understand different returns of investment, yields, how that area works, what's the capital appreciation, because that's what it takes to be able to say this property works in that area. So you can spend more time on understanding different areas and locations. And obviously over time, they become second nature because you spent that time. But when you're trying to do buy-to-lets, HMOs, commercial to residential, flips, there's so much you need to learn for each of those strategies in each of those areas. So if you're going to do UK wide, I'd do one strategy, focus on that and know it like the back of your hand. Or if you're going to do multiple strategies, focus on an area, Birmingham, the Northwest, Manchester, you know what I mean? Just focus on one area. So then you can be an expert in that area, but for multiple strategies, or an expert in that strategy in multiple areas.
Yeah, that's great. Like they say, the riches are in the niches. I like that phrase. That actually
exactly. Hence, that's what. We niche. Our niche is blocks.
Yeah, no, that's actually great advice for for any property sources that is watching us. That is a great strategy. So follow that.
Appreciate that.
So yeah. Now, how do you filter quickly between it looks really nice on paper and this is a blog we should actually go hard on, like a double on? Like, what is your non-negotiable when watching this?
Yeah, so unfortunately, because the only downside to direct to vendor lettering is people or vendors typically aren't motivated. So we negotiate on yield. So we only negotiate on yield because that tends to build in a discount on what we class as the split value. So when you're valuing a block, you'll go, there's 10 units, they're all worth £100,000. So that block is worth £1 million if you sold them all down. But then we apply a discount to that of normally about 20% as a block sale to sell them all at one. If you go into a vendor and say that, they're like, I ain't giving you a discount. Why am I going to give you a discount? I don't want to sell. But if you talk to them on a level of, we have clients, they buy on yield, this is the typical yield they buy at, and the area yield might be 7%, but you're wanting to discuss and secure at 10%, you're not talking about discounts. You're talking about this. It's a non-emotional investment, and that's what our clients are buying at. So the negotiation then becomes far easier, although sometimes, and 50-50, I would probably say they won't go because they're hard set on what they want. But it just breaks down those barriers of you trying to get a discount on a block, which is what you need really to sell it as a whole.
Yes.
So it's got to be a certain set yield for us to actually to move forward. Yeah,
exactly. Now, coming into this, can you actually break down recent deals that you're proud of, like the number stack? How did you found it? How did you structure it? The investors kind of thing, and what was the exit basically?
Yeah, I think one of the best deals we did was a distress sale. And again, I talked about it earlier. So you've got motivation. So all of a sudden, right off the bat, you've got someone that's motivated to sell. And actually the story turned out that they were on a bridge. So bridging finance is short-term finance. And then you need to go on what's classed as term finance, a normal traditional mortgage. They were stuck in a bridge and they couldn't, for whatever reason, they didn't disclose, they couldn't get onto term finance. And with a bridge, if you overrun, you get hit with a penalty. And their penalty, I think their loan was about 600,000. Their penalty was 4%. So for them, they was like, okay, we need to get it sold. So they were distressed. And this was a block of 11 units down in Cornwall. It was actually brought to us by another agent. We found the buyer within 24 hours. Unfortunately, we couldn't quite get that lined up with what the vendor wanted. Within another 36, 48 hours, we found another buyer that actually bought that block within 3 weeks, which is pretty incredible when you're talking that this block was worth 1.2 million and the buyer was buying at 880,000. So yeah, and we made £21,000 off that deal.
All right. That's actually a good deal, actually.
Yeah.
Now, you openly talk about working with cash rich, right? And, time for investors and offering them stronger returns than the bank, basically, right? What does a typical JV or investor structure would look like?
Yeah, good question. So what we are now doing is we're transitioning in because we're getting a lot of opportunities that really we want to look to start acquiring ourselves. So if an investor comes to us, so what we're setting up our consultancy, we're creating our funnels, we're creating the add value. So if an investor comes to us and says, okay, I've got £200,000, great, you can buy blocks and you can get a good return on those. And we'll work with them on a consultancy basis and find the blocks, get the finance, get the conveyancing process sorted, set up their structure with a tax specialist or a financial planning specialist, and then secure the exit either with us just managing on a private tenants or for a lease. If they've got sub 200,000 and probably more like 100,000, because you can still get in at that 100 to 150,000 into a block, we'll look at setting up a couple of different structures. Now those will be either a full-on, they're an angel investor and we'll give them a fixed return, or we'll set up a full JV. And then what we'll do, we want to create something a little bit different, is we want to set up a special purpose vehicle, an SPV, buy that asset. And then if someone brings 50,000, 40,000, 70,000, they will get equal shares in that property equating to how much they put in. So ultimately they will own a proportion of that property. They will get their proportion of rental income from that property. So it'll return every single month. And then there'll be an exit of between 3 and 5 years of us buying them out that property at a said return on that as well. So it's a win-win-win for a client. And obviously it's great for us because it gives us the capacity to use their finances to buy more properties or buy more blocks.
Yeah, no, that's good. That's good. Now, how do you protect investors? Now you're telling me the whole process and yourself in this kind of structure, like legal, security, communications. Like, what do you do to protect it?
Yeah, so if it's a JV setup, so the first as an agent investment, so we will do that based on a charge against the property. So like a traditional mortgage company or a lender, they would take what's called a charge against the property, and the charge sits on the title deed. So with that charge on the title deed, if that property, or if let's say we come into financial difficulty, that property needs to be sold, the lender would have a first charge, and then an investor would have a second or third or fourth charge. So they would basically, first person would get paid off, the first charge, second charge. So they would have a charge on the property, which means if for any reason anything happened, the property would be sold and they would get their money back out the sale of the property. The other one is offering something called a personal guarantee. So if the business didn't work, if the property didn't work out and the charge didn't work out, then we would offer a personal guarantee to pay those back, their money back from our personal investments and personal capital. So there's two ways. But then the second one, where they've got we've got the SPV set up, they have got shares in that. So again, if that company or that property was to be sold, they would have a proportionate or a share in that business or that property, and then it obviously be bought out according to the share that the shareholder they own in that property.
All right. I haven't heard that actually. That is actually good. Are you super confident when you say this whole guarantee, when you give them the money back? How confident are you when dealing with investors? The guarantees?
Because of the strategy is blocks that we know. We're not going into a strategy that we don't understand. We don't know what we need to buy at. We don't know what the finances are going to cost, and we don't know. We know how much we need to buy at, what the lending cost is going to be, if or what the add value cost is going to be, and we know what the exit is as well. So we go into a deal like that knowing our strategy like the back of our hand. So we can go into that with pretty high confidence that if an investor gets involved in that JV, that angel investment, or we're finding them a property on a consultancy basis, we go into it with very high confidence that they'll get the returns, they'll get their equal sharing, and they'll be bought out accordingly as per the JV setup.
Yeah. Would you say actually that every property, maybe property entrepreneur, sources should offer a guarantee like the one you're telling me when working with investors?
Yeah, I mean, it is definitely a bone of contention when it comes to raising JV finance, raising investor finance. Ultimately, a personal guarantee is only worth what that person is worth. So you can offer a personal guarantee all day long, but if you've got no assets, if you don't own a house that's got equity in it, and that personal guarantee is worth nothing because you've got no money to offer up. So when an investor's getting into this and someone is offering a personal guarantee, that's great. But they also need to do some digging on those people that they are investing with to see if they have the money or the assets to be able to pay that investment back. If they don't, the personal guarantee isn't worth anything. So that's a word of warning for any investor that's looking to do a JV with someone. Make sure that somebody has got the money to be able to pay that personal guarantee back if all fails.
Yeah, no, great, very good advice. Now, coming into that, you're running multiple property businesses. Now, you're co-founder of Blockland, right? And plus, you've got an estate agency experience, and I mean, you're a property investor yourself, right? How do you actually structure your week so all of this doesn't fall apart?
That's a very good question. I do use a couple of things that do help. So I use Google Calendar. Our business is all based around Google. So I use a Google Calendar. I structure my calendar I try and do it quite methodical, like even just things like putting gym sessions in, putting time in where I've got to take my daughter to school so that I know I'm not going to let someone down. Although I know I was late for this podcast, unfortunately, there's things that just crop up. But I am a very reactive person. I like to be that person that when someone calls or when someone messages me, I get back to them as soon as I can. So it can play a detriment to me. In fact, it can make me late for meetings, but also it just means that I offer a service that probably someone else doesn't. So if someone messages me at 11 o'clock at night and I'm awake, I'll message them back. But then we also use a tool called Todoist as well, which is basically a to-do list, which we use in the business. So if my business partner is Jack or Jordan, I need them to do something. I don't message them, ask them to do it. I put it on Todoist. So I set a deadline for it. So again, I know then, okay, if it's still on there and it's not been done, I can then hold them accountable. Conversely, they can do the same with me. So that for me is the biggest thing. And a lot of people I know are what we class as solopreneurs, i.e. they're entrepreneurs that work on their own. They've got nobody to hold them accountable. For me, having business partners is critical. For me, it works for me because I have got someone that does hold me accountable, but can't talk for anybody that's not, but I would use those types of tools that hold themselves accountable.
Yeah, I come into calming and accountable because I also have a partner. How important do you think is being accountable with each other? That you also have business partners. How important is it to be accountable and track everything in the property game?
Yeah, it's very important. Like anything in any business, if you're not tracking things, if you're not making sure things are done when they should be done, then things will slip. And that's the great thing with having business partners. If I don't do something when I say I'm going to do it or how I'm going to do it, they can question me because they are equal to me. They are my business partner. I'm not answering to somebody that's below me. Oh, that sounds really bad, but someone that works for me or is above me. So it's great because when they question me, I don't take it personal. I take it as it's a business transaction. You're telling me to do something, I've not done it, so you can hold me accountable and you can tell me why I shouldn't have done it. So I think business partners is really, really important. I like having business partners. I know a lot of people don't, but for me, it works really well.
Yeah, no, 100%. Yeah. Um, Now, what's one thing you think property people massively, overcomplicate in terms of business operations?
Yeah, it's like it's again goes back to any business. You're as successful as how you structure and set your business up. We've got two CRM systems. We've got something called Apex 27, which is an estate agency system, and we've got a Go Eye Level, which is our sales funnel system. We also have Google Drive, where we store our documents. We also have, as I explained, Todoist, Google Calendar, shared calendars. We have shared inboxes. So I think the biggest thing people miss is they think they can do stuff off a spreadsheet and off WhatsApp. It ain't going to work. It'll serve you so well when you've got 5 clients to deal with, but when you've got a database of 1,500 clients like we have, that doesn't work. It's not possible. So systems are really, really important for taking your business to the next level without a shadow of doubt.
Yeah, like they say, if you want 10K, you're gonna get your 10K by skill, but if you want a billion, you're gonna get 1 million by systems. Sorry.
Yes, totally agree. I'll be honest, Fabian. I'm old school. I like doing things on WhatsApp and on the phone.
Yeah.
But thankfully, I have 2 business partners that are very system orientated, and actually, it's now starting to rub off onto me. I used to do this every day. I use my calendar every day. I use Apex every day. I use Go Eye Level every day. So actually, even this old dinosaur can be converted.
Yeah. No, and I mean, in the property space, many people that are old school, right? Because there are people like up of 40 years old, 50 years old, like people that don't know how to put in, systems that are actually up to date, right? So it's good that you're up to date with systems, like 100%.
Yeah, 100%.
Now,
luckily, my business partners are a bit younger than me, so they get it.
yeah, for sure. Now, are there any key systems, now coming in and getting into systems, are any key systems, tools, or processes like that have made the bigger difference in your day-to-day operations?
Yeah, I certainly think there's a system which I mentioned it there, a CRM system called which is tailored and designed for estate agents, which is called Apex 27. Now, Apex 27, when we first had it, was free because it was quite new to market. It actually turns out it is an incredible bit of software. So we could input a property, we can put rooms, floor plans, media, create brochures, create social media, infomercials, I think it's called. We can do everything. We can send out from there. We can input investors in there, create their criteria. When we put a property in, it'll ask us, do you want us to match that up to your investors on your criteria list? Yeah, Apex 27 is our go-to, and I spend pretty much every single day in there because it's so powerful and ultimately it's an estate agent's software, but in a short sentence, sources are estate agents. They're just called sources.
Yeah,
so
exactly. No, okay. Is Apex 27 also for, I think it's mainly for state agencies, right? But
correct.
Do you use it for also, for maybe Blockland, something like that?
Yeah, absolutely. Because ultimately, we are now positioning ourselves and setting ourselves up as an estate agent, but an estate agents that solely deal with blocks of flats. Yes, we're also everything's off market. It still works incredibly well for our business.
Yeah, all right, makes sense. I was just curious, like how does Apex 27 works, but all good now with that. Now coming to personal brand, networking, and just community, like your name carries respect in the industry, and you run a regional property meet, right?
Used to, not anymore.
Used to.
Yeah.
But how intentional have you been about building your brand versus happening organically?
Yeah, so we've done a lot of work on the brand, the Blockland brand, over the last 18 months because if you look at the big brands, I'm just holding some AirPods. I've got AirPods in. I'm on a Mac. Apple brand demands, it demands that authority of one of the best products on the market. That takes time. So we've also now focused on building our personal brands more over the last 12 months. We employ a videographer, so we get ourselves and put ourselves on videos, on content, on social media posts, because, as I mentioned earlier in this podcast, people buy from people, particularly in the property industry. So it's really important. I think you've got to build a brand for your company, but I think building a personal brand massively outweighs and outstrips building a business brand, because people buy into people over buying into a brand, unless it's an Apple, Coca-Cola, something like that.
Yeah, people buy by your brand or something else, right? And yeah, like you said, people buy from people. I'm not gonna get tired of repeating this. Also repeat it nonetheless. But yeah, absolutely, absolutely. Now, for someone who's starting out in 2026, how would you build a reputation in a network in property if you have to start again from zero?
Yeah, I think for anybody that's starting, because it's a very saturated market, do what you're going to say you're going to do. Call when you say you're going to call. Send that email when you say you're going to send that email. If people ask questions, don't lie. I'm not saying people do lie, but don't fudge the numbers. Don't make the numbers work. And again, a lot of people try and be something they're not as well. Don't like, as a sourcer that's saying starting in this world, don't compare my day 257 to your day one. Start from scratch, build it, build rapport, build relationships. Again, we've mentioned it before, property is a people business. People buy from people. Build that relationship with people, get them to like, know, and trust you, and then start to work with them.
Yes, no, great advice. Now, looking back a few in the last couple of years in blocks and investing, what are the 2 to 3 biggest lessons you've taken from wins and losses?
That's a good question. I think the biggest win is just me being myself, me not tying to other people and what they do and their brand, and just being authentic. I think that's massive. And I think once you're authentic, people will start to notice that and go, okay, I like that, let's work with that. I definitely think, as we're now going into 2026 with lots and lots of people wanting to get into sourcing, be a niche, like we talked about it earlier. Do one thing and be exceptional at that one thing, so no one can question you on that. They come to you, they ask a question, you can answer it. Not, oh, I need to do this and go away and do that. And I think, one of the biggest lessons I've learned is don't do too many things at once. Build that one thing. There's a thing called the 70-20-10 rule. Spend 70% of the time on your main business, focus on that, grow it to where it needs to be. Spend 20% of your time on the next thing, which is obviously quite minor, and then 10% looking at new things. So hopefully when you get that 70% running on its own, being self-sufficient, the 20% replaces it and becomes the next 7%, 10%, 20%, and then so on and so forth.
Yeah, great advice. Now, you recently talked about focus, discipline, and profit. What did 2025 teach you specifically, and what you're doing differently coming into 2026?
The biggest thing for me, 2025, is I was running an estate agency, I was running a networking event, I was working with a developer, I was delivering education, and ultimately I didn't have anything that actually was just paying the bills, that we say, that was just keeping me going, ticking over. So my learning was from that. Just focus on one thing, build it, get it to a point where it is its own ecosystem. I know I really like that word. It's running itself. And then look at diversifying, look at doing other things. That's the biggest lesson. Don't try and do too many things at once, and just focus on one thing and make that the best thing you can be.
Yeah, that goes also for the last question, which is a biggest lesson from 2025. So that's good. Now, if you have to strip everything back and give a new investor one mental model for making decisions in property, what would it be?
For an investor?
Yeah.
Yeah, for an investor, ultimately, for an investor, they've got to feel confident that if they're going to work with someone, particularly if they're time poor, that person, and again, it comes back to what we just talked about there, that person is an expert, that they know what they're talking about, that they can give you the best advice. Because again, I see it time and time again. People send out deals, people send out properties, and they don't know the full context. They don't understand what the exit is. They don't understand what the cost of the finance is. There's things like what we class as stress tests. I was having this conversation with someone today. If you're lending and your rent's coming in, it doesn't pay the mortgage, then you won't pass something called a stress test. So for me, investor has got to align with the same vision as a sourcer, and also trust them, buy into them, and make sure that they their ethos and their characters align, basically.
Yeah, and that comes also with the team and people you're building around. So let's say your partner, like I said, the sourcer, basically the people who work with you and work for you has to be aligned with the vision. Because if the vision doesn't align, then nobody's growing, nobody's working towards the same vision, right? So I would say that also applies for all the people you work with, right?
Yeah.
So
no, 100%.
Yeah. So yeah, no, that's great advice. So yeah, I mean, that was actually my last question. We've been through a good amount of questions and data here. So yeah, thank you so much, Kevin, for coming in here. You shared out great advice, great information. So yeah, that was everything for this podcast, guys. Make sure you like, you comment, you subscribe, and everything. And I'll see you on the next one.
Thanks.